I feel like the noise around the Fed is getting louder, whether it's Trump pointing it on Twitter or whether it's certain analysts coming out, Canaccord Genuity. We've heard it from Wells Fargo, worried about the Fed effect, particularly as we get these sort of market jitters. Is that your number one risk as we go into November, December, or what is? You know,
I would say in relation to the Fed, my number one risk is wage inflation. It's something that we've been following really closely. At the start of the year, it was moving quickly, 2.2 to 2.5 to 2.7, and that was expected to continue. It hasn't. It hasn't shown up yet. That has allowed corporate profits to be as strong as they are. It has helped the Fed renormalize interest rates in a very normal way.
So the risk here is that it starts picking up once again?
The risk is, yes. The labor market is currently very tight. We would expect wages to move higher. They haven't, and therefore that hasn't been the problem that we were expecting, but it is the one thing that I'm almost solely focused on.
There's a lot of divided thoughts on where the market is and whether it offers good value or there's more downside to come. So technicals come into play and get a lot of extra attention. How do you fold that into your analysis? Does it prompt you to make a decision one way or another?
I mean, really, the crux of my question is, are we headed into a recession? And the variables we look at, everything says not in the near term. We don't have issues with PMIs. Wage inflation remains tepid. We still have a yield curve that is not inverted yet. Those are the preconditions that typically precede a recession. They're not here. Absent a recession, you want to be in equities over the next 6 to 12 months.
It's that simple. Like in the end, like if you want to predict a downturn, if you want to time the market, you have to predict a recession. And no one can really do that, so what's the point?
Well, it's not you can't predict a recession.
But people are pretty bad at recession prediction.
You know, but there are signals of which tell you that we are getting long in the economic cycle.
Right.
Some of the ones I mentioned, for instance, the ISM, it's currently at 60. We'll get another reading tomorrow. We don't expect a material deceleration in the ISM. At this level, over the next 12 months, the economy has historically remained strong. Equity returns as well.